Thanks for tuning in to your daily dose of quick real estate updates, local housing trends, and market data, plus tips, tools, and strategies to help you buy, rent, or invest with confidence. You're now getting ready with RealiCare Reports, powered by the innovation team, Cami and Rex. Now go grab your favorite morning beverage, whether that's coffee or tea, and let's enjoy this episode.
Welcome to the deep dive. Today, we're getting into something really relevant, navigating the housing market when, well, the economy feels a bit uncertain.
And we're looking at a specific piece from Redfin, right? Published just recently, April 16th, 2025. It's called How to Buy, Sell, or Rent a Home Amid Economic Uncertainty.
Exactly. And the timing is key here. The article itself points out that, President Trump's new tariffs announced earlier in April have definitely stirred things up a bit, added some volatility.
Yeah, that's the context. Economic shifts, instability, and that always trickles down, or sometimes floods, into the real estate market. Buying, selling, even renting it affects everything.
Right. So what we want to do today is basically pull out the key advice, the core insights from this Redfin report, specifically for you, the listener.
Think of it as the Cliff's Notes version, but focused on making smart decisions in this particular economic moment.
Perfect. Okay, so let's start with buyers. If you're thinking about buying a home right now, what's the main message?
Well, the very first point Redfin makes is about financial comfort. They're really stressing that buyers need to be genuinely comfortable, financially speaking, before jumping in.
So not the time to max out your budget, push it to the absolute edge.
Exactly. Don't stretch yourself thin. And the reasoning is, well, it's pretty straightforward. They talk about roughly a 50% chance of a recession in the next year.
50%. Wow.
Yeah. And they also mention the potential for a prolonged trade war, making things potentially worse. It adds another layer of risk.
Okay, so that potential economic dip, maybe job losses, how does that connect practically for a buyer?
It connects directly to your emergency fund. Redfin's basically saying you need a solid cushion, enough to cover your mortgage payments if, the worst happens and you face job insecurity for a bit.
Right. It's that buffer, that peace of mind, really.
It's about preparing for those what-ifs that feel a bit more possible right now.
Okay, good advice. Now, interestingly, the article also suggests buyers might actually have more power than they think in negotiations.
Yeah, this is a really interesting point. They've observed that the gap between the list price, what the seller initially asks for, and the final sales price is widening.
Widening gap. Okay, so what does that signal?
It strongly suggests, basically, that there are more homes on the market than active buyers looking to purchase them. Supply is outweighing demand, at least to some extent.
That's right.
And the article predicts that continued macroeconomic weakness, think potential job worries, maybe less consumer confidence, banks being a bit tighter with loans, will likely keep pushing things in this direction.
So sellers might be feeling the pinch from the broader economy, not just, a normal market slowdown.
That seems to be the implication, yeah, which makes them potentially more open to negotiation.
Got it. So the actionable advice for you if you're buying is pretty clear then. Don't be afraid to negotiate on price. The conditions seem favorable for it.
Definitely worth a shot.
Okay, third point for buyers. Mortgages. Always a huge piece of the puzzle. Sounds like it's a bit wild out there right now.
That's a good way to put it. Redfin highlights that rates are bouncing around more unpredictably than they have in recent memory.
Why so much sexuation now? Is it just the tariffs or?
It's a mix. The tariffs, the general economic uncertainty, worries about recession, all these things influence investor sentiment, bond yields, and consequently, mortgage rates. So yeah, timing the market to get the absolute rock bottom rate, extremely difficult right now.
So what's the advice then? Just cross your fingers.
Well, not quite. They suggest, first off, don't obsess over catching the absolute lowest point. It's too unpredictable.
Okay.
Second, remember refinancing is an option down the road if rates do fall significantly after you buy.
Right. You're not necessarily locked in forever at today's rate.
Exactly. And third, and this is a really practical tip, ask your loan officer about float down options after you lock your rate.
Okay, float down. What exactly is that? Can you break that down?
Sure. Think of it like a safety net for your rate lock. You lock in a rate, say 6.5%. But if, between locking and closing, market rates drop significantly, maybe to 6.25%, a float-down option might let you snag that lower rate.
So you get the benefit if rates improve even after you've locked.
Potentially, yes. Not all lenders offer it.
Yeah.
There are usually conditions, but it's definitely something worth asking about. Gives you a bit of potential upside.
Good to know. Definitely ask about that. Okay, final point for buyers from the article. And this one feels a bit counterintuitive, maybe. Sell your current home before buying the next one.
Yeah, it sounds like a hassle logistically, and the article acknowledges that. Coordinating moves, maybe temporary housing.
Right.
But the big advantage, especially now, is certainty. You know exactly how much money you have to work with for your next purchase.
Ah, okay. You've got the cash in hand, basically.
Precisely. And crucially, you avoid the risk of carrying two mortgages simultaneously if your old house takes longer to sell than you expect in this, potentially slower market.
Yeah. Carrying two mortgages sounds stressful anytime, but especially now. So it reduces financial strain.
That's the main benefit they highlight. Financial clarity and reduced risk.
Okay, that makes a lot of sense in this context. All right, let's switch perspectives. What about if you're thinking of selling your home right now? What's the key advice from Redfin?
The number one thing for sellers is pricing. Strategic, realistic pricing.
Realistic, meaning?
Meaning, be honest about the current market conditions. Redfin notes a trend where sellers are maybe being a bit too optimistic initially. They're overpricing.
And then having to cut the price later.
Exactly. They're seeing more price reductions happening after listing. So while prices overall aren't necessarily crashing, the market seems less willing to accept ambitious starting prices.
So get the price right from the start. Ground it in reality.
And it's not just the asking price itself. The negotiation might go deeper.
Oh, like what?
Sellers should be prepared to negotiate on other things too. Maybe agent commissions or including certain furniture or appliances or agreeing to cover specific repairs the buyer requests.
So more flexibility needed across the board, potentially.
That's the advice, yeah. Being flexible on these points could be what makes the deal stick in this climate.
Okay, makes sense. What's the second major point for sellers?
It's about deal volatility. Basically, being prepared for the possibility that a deal you've agreed on might actually fall through before closing.
Oh, wow. Why is that risk higher now?
It links back to everything we've been discussing. The economic uncertainty. If financial markets stay rocky, if that starts hitting the job market more, a buyer's financial situation can change suddenly.
Right. Their ability or even just their desire to go through with a huge purchase could evaporate quickly.
Exactly. Something unexpected happens, they lose confidence, maybe their loan approval gets shaky. It can derail the deal.
So sellers need a bit more, I guess, emotional preparedness for that possibility. Maybe have backup plans.
It seems wise, yes. Maybe vetting buyers a bit more carefully regarding their financial stability could also be part of it.
Okay, tough but important consideration for sellers. Now, let's talk renters. How does all this economic uncertainty impact renters, according to Redfin?
Well, the potential primary effect they point to is an increase in rental demand.
More people renting. Why?
The logic is if buying a home feels more uncertain or difficult right now because of rates, job fears, whatever, some people who might have bought will decide to rent instead or keep renting longer.
Ah, okay, so fewer buyers could mean more renters competing for apartments?
That's the potential outcome, yeah. And more competition could lead to landlords trying to raise asking rents.
Makes sense. But is that the whole picture?
No, and that's an important clarification in the article. They also point out that in many places, there's actually quite a bit of new rental supply coming online. New apartment buildings finishing construction, for example.
Okay, so new supply could counteract the increased demand.
It could certainly help balance things out, yeah. It might put a ceiling on how much rents can actually rise. So the advice for you, if you're a renter facing a big rent hike at renewal time, is definitely shop around.
Don't just accept it blindly. See what else is available in your area first.
Absolutely. Do your homework.
Good advice. Now, there's one more point for renters, specifically for those who are purposefully renting while they save up a down payment, waiting for things to stabilize before buying.
Right. A common strategy.
Yeah.
The question is, what do you do with that down payment money while you're waiting?
Yeah, you don't want it just sitting there losing value to inflation, but you also need it safe.
Exactly. So Redfin gives some general ideas. Not specific financial advice, of course, but things to explore. Options like stocks, bonds, but also safer things like CDs, certificates of deposit, or money market accounts.
A range of options with different risk levels.
And the absolutely crucial thing they emphasize is matching the risk level to your timeline.
Meaning, if you think you might buy in, say, a year or two,
then you probably want that down payment money in something very low risk, very stable. You can't afford for it to suddenly drop 20% right when you need it.
But if your timeline is maybe 5, 10 years out?
Then you might consider investments with potentially higher growth, but also higher volatility, knowing you have time to ride out any dips.
Got it. Align the risk with when you'll actually need the cash. Super important.
Absolutely critical.
Okay, so let's quickly pull this all together. The key takeaways from this Redfin analysis for buyers: be financially cautious, know you likely have negotiating power, shop hard for mortgages, maybe think about selling first.
Yep, for sellers.
Yeah.
Price realistically right from the start and be ready for negotiation on various terms and also, unfortunately, for potential deal hiccups.
And for renters, watch out for potential rent increases, but no new supply might moderate that, so shop around. And if you're saving that down payment, be really thoughtful about where you park that cash based on your buying timeline.
I think that covers the main points. The overall theme really is that navigating this market, whether buying, selling, or renting, requires extra care right now, more diligence, more proactive planning.
It definitely does. It's about being informed and making decisions that fit your specific situation in this uncertain economic climate.
Couldn't agree more.
So here's something to maybe leave you thinking about. We've talked a lot about how the big economic picture affects housing, but given how interconnected everything is, what other parts of your personal financial life beyond just real estate might need some extra attention or preparation because of these broader economic trends? Something to mull over. Thanks for taking this deep dive with us.
Well, that wraps up today's episode of RealiCare Reports, where real estate meets real life. For more updates, tools, and insights that will help you buy, rent, or invest with confidence, be sure to follow, subscribe, stay connected, stay informed, and stay ready. Until next time.